Welcome back, everybody, to another Market Conversations. I'm Jerry Hall. Glad to have you guys tuning in tonight. Got some folks already lined up in the queue. Hi, Lori, P. Kelly, Scorpion, DC Precise, Tony Morissette. Good to have you guys in the house. We are broadcasting through YouTube. So those of you that saw the notification in YouTube, thank you so very much. We're also broadcasting to Facebook Live as well as Theta TV. This is our very first night, I think, that the message didn't come up saying, hey, Jerry, you're not streaming to Theta. So I'm fairly certain we're streaming. Uh-oh, and there's the message. We're having trouble streaming to your destination. Is it possible? Oh, boy. Well, guess what? We're not streaming to Theta. And for those of you that were hoping that we would, I have no answer other than I can barely do this. So we'll just go ahead and remove it and we'll fix it and call it good. We got producer Brady in the house. Great to have Brady here. And hopefully soon I'll be joined live in studio by Seth from TaxBit. But before I do or get into any of that, let me do my little opening monologue. One of the things that I wanted to have kind of be a theme tonight, it's one thing to get into this crypto space, invest some money in hopes of a return, right? We're all doing that. It's another thing to look at this space as a possible revenue stream for years to come. I'm talking about passive income strategies. I'm talking about yield. Now, both gains as it pertains to investments and passive income strategies all have tax consequences, right? When Seth comes in, we're going to talk about TaxBit. We're going to talk about portfolio utilization. We're going to talk about the services that TaxBit offers. We're not going to really dive into the yield, other than to know that the IRS is very interested in what they call interest income or dividend interest income as it pertains to the United States residents and their tax forms. Now, there's going to be, for a while, a lot of gray areas in this particular field as we're talking about passive income strategies. Like, for instance, how is a MetaMask wallet or a out of the country organization that you're staking your tokens to, are they going to be compelled to 1099 you and submit a copy of that 1099 to the IRS? I don't know. So far, none of those entities have 1099 me, so I'm not that concerned about it. However, it's going to be a topic that's going to roll across any of our desks if we are getting interest on our digital assets, even if we're not selling them. See, that's not the issue. The issue isn't the selling. The issue is being the recipient of. For instance, if you have money in the stock market and you have a stock that pays a dividend, if you press the dividend reinvestment button, which means they just pay you your dividend in more stock, which is no different than having your Bitcoin or other asset on a Nexo or BlockFi or Celcius and earning more Bitcoin, etc. Whether you sell it or not isn't the issue as the IRS is concerned. It's the fact that it was created and given to you. This is an interesting point. And I'm curious how many of you are educating yourself around this so that as these things unfold and happen for you, you're well aware. I know people, and I've spoken to many of them over the last several weeks, who have amassed quite a lot of interest income dividends as it pertains to their digital assets. And because they haven't sold them, they're just allowing them to compound within their portfolio. They put no thought to the tax implications. If you deal with a CPA or a tax preparer, talk to them. Make sure you have the dialogue. It's also important to understand who's reporting you and who isn't. Case in point, those entities that are not the quote unquote regulated platforms, like we all know we get 1099 from Coinbase. Those of you that have held Celcius accounts know that you'll get 1099 from Celcius. Brady, did you want to chime in? Was there something that you needed to say?
No, I accidentally logged myself off. Sorry.
Okay. All right. Well, go backstage, do all the incredible stuff you do, and we'll catch you soon. I'm still waiting for Seth actually to log in. He got the link about 15, 20 minutes ago, and maybe he's just running a little behind. But there's some folks that I missed here on the shout outs as the show was beginning. Obviously, UX is great to have you. Tube That Pipeline, great to have you in the house. Bill Gould, I know Bill Gould's got questions for TaxBit. Bill Gould had quite the little Twitter exchange with TaxBit. Hoping that worked out. Biotech Breakout, like to have you. Demayan, great to have you. Seth. Oh, there's Seth right there. Well, Seth, I sent the link in your email. I can send the link again. It's super easy. Click, watch this. I'm doing this live. So this is the first time that I'm actually submitting a live link. Compose a new email. I'm sending it to Seth. There he is right there. Blank, link, pow, and link again, paste, and send again. Bang. All right, Seth, check your email. It's in there. Dim-witted monk. What a great name. Great to have you. So anyway, the show tonight is really about provoking some thought. I want you to really take a good look at your situation, right? Here's one of the incredible things. Ronnie Vale, good to have you in the house, man. And Dyler Durden, good to have you with us tonight. Many of us are approaching or are already exceeded levels of net worth that we've never had before. Now, with that comes some responsibility. One of the biggest responsibilities you have as an investor is understanding what the capital you put to work is actually doing, as opposed to just knowing that it's going up in value. Understanding your situation as it pertains to where your investments and what they've generated, whether you sell them or not, how they apply to your tax liabilities and for whatever jurisdiction you come from. If you don't have the answer, Google is wonderful. And I'm sure there are many CPAs and tax preparers that will speak to you during a consultation so that you can get some of the answers that you need. Please don't fly blindly through this. We're talking about large sums of money for many of us. And for those of you that haven't hit those numbers yet, if you stay in this market long enough, I'm pretty sure you're going to. We're looking at a market that is going to do nothing but grow for the next 10 years. Sure, there'll be ups and downs. There'll be market corrections. But for the most part, this is an amazing growth industry that we're all invested in. And it's, with that comes responsibility. So part of the show tonight is education. We want to have fun. We want to entertain, but you also want to keep it real. Let me now welcome in Seth Wilkes from TaxBit. Hey, Seth, good to have you on the show, man.
Hey, Jerry. Sorry, I missed that link. I'm not sure where it went.
Well, Michelle responded to part of it, and so I thought for sure you would. But anyway, you're here now. That's what's important. We're going to talk about TaxBit, but we're also going to talk about that amazing guitar collection I see in the background. Let's talk your favorite guitarist. Top to 5, you go.
Okay, so I like fairly eclectic music. So I would say My number one guitarist is Nels Klein, who plays for a band called Wilco. They've kind of a Americana, yeah, they've been around since the 90s, but the dude's like in his 60s now, but he's still just shreds. Just love it.
Right on. So we got Neil next. Your top five, and then I'll do my top five. It'll kind of give you an idea of where I am and where I came from.
Okay, well, we got to have Jimi Hendrix up there, of course.
Jimmy.
Yep, and our other friend Jimmy from Jimmy Page, can't go wrong there. Also, gosh, I'm blanking on the Queen guitarist. I've been listening to him a ton lately.
Brian May.
Thank you. Yes, Brian May. And then let's just round it out with a little 80s rock, and we'll go with Slash.
Wow, nice, nice. I'll tell you, I'm not that far off from you. I'd say I don't have a 1 through 5, but I have a top 5. So my top 5 would be like Joe Bonamassa. I think. Oh, he's amazing. He's phenomenal. Steve Vai, I think, is a master. I'm going to throw in Eddie Van Halen because of the impact that he had. I was growing, kind of becoming an adult in the 80s, and Van Halen was just this other sound. It was just amazing. But I've got some old school guys. Clapton is definitely in there, and I'd say Page also. I mean, I must have worn out at least 3 different sets of Led Zeppelin 1 through 4. I mean, literally wore them out where the needle it wasn't working very good on the phonograph anymore. I had to get a new album because I just played it so much.
Yeah, that's awesome, man.
Right on.
Great choice.
Well,
there.
You're a music lover, and obviously you play if you have that many guitars behind you. Right on. Good for you. But you're not here to talk about guitars. You're here to talk about TaxBit. I love TaxBit. I've had an affiliate relationship with TaxBit for a while, but I was a fan of TaxBit prior to becoming an affiliate partner. And I'll tell you this, the tax optimization element that's available through TaxBit takes it to a whole nother level. But basic stuff, right? Plug into TaxBit, hit this exchange, that, populate, boom, 3 minutes. You're literally can compile your entire deal that you need to compile, give it to your tax guy, and it makes that process so easy because so many tax people are not educated really in the crypto space. So tell me what drew you to TaxBit and what you do there.
Yeah, so I am a CPA by trade. So I've spent about 17 years specifically working in tax, but I've been everything from working with large multinational corporations to high net worth individuals. I've done a little bit of everything. And then about 3 years ago, really, it was actually during the crypto winter, I started getting into crypto and really diving deep into cryptocurrency tax issues. And so I started getting into this space and just loving it. And so with TaxBit, I've been here for a little over a year now, and I run our subject matter expert team. So our team is comprised of CPAs and attorneys. So we handle, for our premier plans, we do CPA consultations with clients. I also handle, anytime we get clients that get notices from the IRS, we help respond to those notices. And that's on the consumer side. On the enterprise side, we work with a lot of different exchanges. And so we do consultations with them as well as provide them with 1099 reporting capabilities and that kind of thing. So really, it's I work with a lot of incredible people, and I love it. The TaxBit team is just awesome.
Well, I'll tell you one of the things I really like about TaxBit is that you're not just stopping with the products that you have. When I had Austin on, I think Austin was my first TaxBit folk, one of the TaxBit folks to come on my show. And to think about, you guys are talking about extending jurisdictions into other countries, You're talking about expanding your product line from the what you offer now to somewhere down the road in the roadmap. I think we've got passive income, crypto passive income yield strategies coming that'll be part of TaxBit at sometime in the future. This space is just unfolding and growing so quickly. To know that you guys have got a vision larger than what you're just doing right now, I think is really wonderful. It's also unique in this space. I'll be honest.
Yeah, Jerry, thanks for that. I mean, honestly, we entered into this space with consumers in mind, and we quickly realized that just like in the securities and equities world, in that world, tax reporting really is at the exchange level, right? All of that responsibility is at the exchanges. And so we quickly started pivoting and talking to exchanges about, their requirements to report. And so we extended there. We are, the other part of my role that I didn't mention is that I run our government relations. And that means that I'm in constant, contact with the IRS and Treasury Department, as well as, members on Capitol Hill, talking about smart regulation that will not get in the way of innovation, but that really will help pave the way for these bigger institutional groups to come in, like the Wall Street, traditional, like the Fidelities and the Morgan Stanleys. And so we really do take a holistic view on what we do. We always consider, the consumers, our enterprise, as well as what the government needs. And
that's great. Let me quickly say hello to Dubai Money. We got Taekwondo's in the house. Simon Bickerton. I love having Simon. Celcius. I don't know if that's how you pronounce your name. Kel caught me on Digital Asset News. I did a live stream with Rob today, and that was wonderful. Look at this. We're joined by the one and only Michelle O'Connor. Thank you, Michelle, for tuning in. And Jim, nice to have you on the show. Seth, one of the things I wanted to ask you about specifically as it pertains to TaxBit is this. So Tony brings up a great question, and we'll just combine them into Tony's question. What is the implications of Kraken now having to provide customers' info to the IRS? And how far back will the IRS go in a retroactive manner? As somebody on the government team, you may be privy to some directionality with that. What do you think?
Yeah, I can't say specifically.
General, random.
The confidentiality there, but the fact is, like, the IRS has a pretty broad range of tools to go and request information. And so I think, first of all, you have to look at what the statute of limitations is. Usually a statute runs for about 3 years after you filed. And so my initial guess would be that they would be looking at the past 3 years. Now, if they never file anything, then the statute never started. And so there is the possibility that they could go back many years, right? And so, for those of you who have been going a little bit under the radar, just a fair warning, there is a possibility. But, this actually goes back. I'm sure you remember, Jerry, when Coinbase was issued all of those John Doe summons back in, I want to say it was 17 or 18. Mm-hmm. And initially the court, they went to court, and the court said, IRS, you are asking for too much information. It's too broad. You need to narrow that scope. And so they came in and they decided to, apply a much more narrow scope, which was basically if you had more than $20,000 in proceeds and more than 200 transactions, then they would provide it. And so it only ended up being about 13,000 users for Coinbase at that time. Now, I think that the IRS has taken the results from that case, and they have come in and tailored this request for Kraken to be much more within like a narrow constraint, but I believe it's going to be a lot more broad than what happened at Coinbase. But if I know anything about Kraken will fight. And so they will challenge and try to get that scope as narrow as possible.
Right on. I've seen a bunch of folks pop in who caught the live stream I did on Digital Assets News channel today. Carlos, thank you for coming in. Obviously, Crypto Yeti, and of course, Frosted Crypto Cookies. I'm glad that you guys enjoyed the show, and I'm glad you found my channel here. Lori had a question regarding 1099s. Now, I can't find it, but that doesn't mean it didn't happen. So let me throw it out there. If you don't get a 1099, no worries. What's your thought?
Here's the thing, guys. Like, this is the one thing about blockchain is that this is an immutable ledger, right? The record's out there. Now, if you are trading off chain, through an exchange, then, a lot of people think, well, if they're not reporting a 1099, then the IRS is going to know. But look at what's happening with the Kraken. They are coming down and narrowing like how to request this information. So even if you didn't get a 1099, you still have an obligation to report. And so that's really that's why TaxBit exists. We are here to try to make it much easier on you as you're compiling all your information, but you still have to file. It comes down to you. I mean, you can't point at the exchange and blame them like, oh, they didn't give me a 1099. I didn't know what to do. Like, the onus is on you.
Absolutely. Well, and I can't speak to the legality of my particular strategy, but you are a CPA and with your CPA hat on, not your TaxBit official hat on, just a CPA hat on. And we were having coffee, so it's not an official thing. You're not giving me actual advice. And I was just saying, hey, you know what? Jerry. I've got this strategy, and it's like this. If I'm dealing with a regulated entity, whether they 1099 me or not, I'm going to act as if they will. Now, in crypto, there are many things that have nothing to do with actual even entities. I mean, for instance, you've got decentralized exchange, right? You've got yield farming. You've got staking with entities that are not United States entities. They're most of the time entities that were started by a nonprofit in Switzerland and then became a decentralized entity of its own. I'm not really totally sure how to play that. I know that there is letter of the law, right? I do know that there is letter of the law, but I also know that if somebody isn't compelled to do something, it may not happen. So for instance, some decentralized exchange, how are they going to report to the IRS anything? I don't know. This could be a failed strategy.
Well, I don't know.
We're going to see.
I think your strategy reflects kind of how the IRS has been going about giving additional guidance, and frankly, how slow they have been to give good, clear guidance. And will the IRS catch everybody? I mean, obviously, no. Like, that's a huge amount of work for them to do, but they are using the tools at their disposal, right? So the Kraken summons is a good one. I think it may have been Circle or the previous Poloniex was going through the same thing. So yes, I would always, if you're dealing with a U.S. exchange, report it. The other thing to think about too with the DeFi side of it is that even though there is not an entity to report, the IRS, if you were to get audited, the first place they start is cash. Where did your cash go? Okay, your cash went to Coinbase. Okay, then you converted it to Bitcoin. Then you sent that Bitcoin or Ethereum to one of these decentralized platforms. And then what did you do? So it all starts with the cash. And so they really do have the tools to be able to trace this. And so again, less than 1% of people get audited, right? But if I were the IRS, and trust me, I'm not advising them in this capacity, but everybody knows about that question that's on page 1 of the tax return this year, right? You have to attest whether or not you had crypto activity. Well, if I were the IRS and somebody checked that box, I would probably program some kind of tool to go back and look at prior filings to see if any crypto was ever reported. And then if I didn't see anything, but then you did have activity this year, I would send a notice and say, hey, we noticed you disposed of crypto this year. Can you substantiate where that came from? Like, there really are ways that they're going to try to come at this. And so frankly, I think it's better just to be upfront and frankly, the more people that are voluntarily complying, the easier it will be for greater adoption for this amazing asset class. we've got to get away from that whole trope that we're just a bunch of Silk Road, people, trying to, hide from the man and doing illegal activities. We need to create an environment that is friendly for that mass adoption.
I couldn't agree more. And it appears, right, if you follow the trend is that these networks are growing. Adoption is happening, right? And the crypto space is no longer a small group of outsiders. It just isn't. It's growing exponentially. And and globally, it's like just not a US phenomenon. It is a global event. Now, before we go any further, Bill Gould has been a supporter of my program since day one. Bill had an issue with TaxBit, was vocal about it on Twitter. He's come on this show. I'd like to give him his 2 minutes of airtime here. When is TaxBit going to get a phone/Skype customer service? I hate text, email, customer support garbage for $500. Well, Bill, did you really sign up for the $500 one? That's my question, because I know Bill. Bill will rub two nickels together to try to get a quarter. But if you did, and you bought their top tier program, I can guarantee you that you have access on the phone to a CPA. I know I have that tier, and I know I have that ability. So yes. I'm questioning the question, Bill.
Well, I don't mind addressing
Fire
that.
away.
So, number one, our we do support primarily through chat. And frankly, we've got incredible feedback, and most everybody has really enjoyed working with our chat team. And we've had comments like, man, by the time we're done, like it feels like we're family. And our support team is world class. They're all, in-house, and, they do an incredible job. I think Michelle mentioned it just recently, like if we move to some of these other types of support, that just increases prices, right? We have to be able to, stay within a healthy margin to keep the business going. But frankly, though, we've rarely had a bad experience. So Bill, I hope that, we were able to resolve it.
He signed up for the 500. Bill, if you signed up for the 500, call the CPA.
Yeah, Bill,
you get a consultation with a live CPA. You can
consult with me or one of my team.
There you go. You could have Seth.
Yep.
Boy, that would be a slam dunk. There were a couple of great questions. One pertaining to, I can't find it. Brady will find. Okay, if I buy 10 grand of crypto and it grows to 100 grand, and I give it all to a nonprofit 501c3 without cashing it out, he just donates the coins. It should be a donation. You should be able to deduct the whole 100 grand, right?
Yeah, this is awesome. So this is a lot like the rules around securities. So number one, you need to hold it for at least a year. Okay. So if you hold it for a year and then you go and donate it, then you actually can deduct the fair value at the time of the donation. So in this example, you can deduct a full $100,000 as a charitable deduction. Of course, that's an itemized deduction, and not everybody itemizes. But if you have $100,000, you'll probably be itemizing. I think you'll be above the standard deduction. So that's one really great thing. And you won't recognize any taxes on it. Okay, so all of that appreciation, you won't be taxed on it. So I have seen several clients who have taken advantage of this, and they've had huge deductions. These are really early people in crypto who have done up to $1 million in donations. So that is a great way. It's a nice tax planning strategy, but it also applies to securities and other elevated assets.
Sure. Hey, Grind by Sell says, hey, if you're earning $4,000 a month in interest from Celcius and it's compounding, how much tax do I owe? I think I know the answer. And Seth, you're the man, but let me, the novice, see if my studying is correct.
Okay.
It's not based on how much interest you're earning. When you are earning interest or dividends, it's called interest, dividend, income. Keyword income. You take the total that you've earned, you add it into your income. Your total income defines your tax bracket. So only you can answer that question, because only you know your total income for the year. Not Seth.
Yeah. So that's exactly what
Did
I
I
was
nail
saying.
that?
It really depends. Yeah, you nailed it. I mean, it really depends on like what are your other sources of income. So that is what drives what tax brackets we're going to be in. But what I can tell you is if you're earning it and it's coming in as some form of interest, or really interest is kind of an interesting conversation because it's not interest. Okay, you're getting paid out property. Because the crypto you own is property. And so you're getting paid out in additional property. And so we call it interest because that's the easiest thing to relate to, but the IRS doesn't actually call it interest. I mean, when we report it for our clients on 1099s, it shows up on a 1099 miscellaneous, not a 1099 INT.
Yeah.
And that comes directly from conversations we've had with the IRS. So point being, though, is that's ordinary income. Okay, so income, interest, dividends, that's all taxed at your regular tax rate. There's no beneficial rate like capital gains or long-term capital gains. So that's something to keep in mind.
Right on. Channing, good to have you in the house, man. I'm not going to catch you up. I'm going to let you go back and watch the replay. It'll be on the channel. You know exactly where it is. Carlos, Jerry, I have a question to Seth. I'm not a U.S. citizen nor a U.S. resident. And if I do a lot of money in cryptos and I go back to my country and cash out there, do I owe taxes to the U.S.? That's a really good question. Do you have a social security number? That would be my first question. Do you have a social security number? And did you use it for ID and how you did any of those things? Because Seth, I'm sorry, I'm talking too much. Seth.
No, it's okay. Here's the thing. As a foreign, if you are not a U.S. citizen, and I know that Jerry was talking about, what do you have a tax ID number or a social security number? If you truly are just a foreign citizen living abroad, and let's say you're trading on Coinbase or one of the U.S. exchanges. Now, the way that the IRS looks at this, they look at the source of the income. And based off of what you do, there are different sources. So for example, if I'm just buying and selling and swapping coin to coin, that's considered just capital gains. And the source is where the investor is. Okay, so in this case, if you are a UK citizen and you're sitting in the UK doing this, then they consider that UK income, not US income. Now, if you're staking and you're earning rewards or you're getting interest, and you're on a US exchange, that could be taxable income in the US. And so even if you're not, sitting here in the US, but you're trading on a US exchange, it's possible that they may need to automatically withhold from you. Nobody does this right now, just so you know, but it is in the law. And I think pretty much everybody has recognized that it's something they're supposed to do that they haven't touched. But as we all know, there is not a lot of, you try to find things that are analogous, right? In the traditional finance world and crypto. Staking, what is that? What is analogous to that in the normal finance world? And so we have really novel situations where it's a little bit hard to fit them in existing boxes, even though that's what the IRS has tried to do, is fit it into an existing box. And so I think there's plenty of gray area. So I'll finish answering your questions with this. I think if you're a foreign citizen and you cash everything out, even if you're on a U.S. exchange, you shouldn't be taxed on that generally.
Interesting. Let's not write that in stone, though.
Right.
Thanks. That is my exit strategy, Kurt. That's my exit strategy. I'm sorry. I don't know what that pertains to, unless it was in conjunction with something.
He might be suggesting that he's going to leave the U.S. and rescind his citizenship and go and cash out somewhere else.
That's the only thing I've come up with, Seth. I live in Costa Rica.
Oh, okay.
I've been down here in 3 years. My wealth has been amassed while I'm here. Interesting, though, while I'm here, and I amassed my wealth here, the IRS does not care. They say, Jerry, you're a U.S. citizen. We're the U.S. You can go anywhere in the world. It doesn't matter. You owe us. We don't care if you used only foreign exchanges. We don't care about any of those things that you think are right or wrong. We have these things called tax code. And we have this wonderful book this thick, and we call it U.S. International Tax Code. Means if you're outside the U.S., these are all the things you're going to be subject to. And I was like, okay, do I got to move to Puerto Rico? Maybe got to move to Puerto Rico. They speak Spanish in Puerto Rico. Maybe thought.
You're not the only one, but the US has, a global tax system. And what that means is exactly what you're describing, is that they don't care where you live, whether you're on US soil or abroad, they will tax you. Now, biotech is bringing up a really great point. There are treaties between different countries that help protect against what they call double taxation.
Right.
And so what this typically would mean is that if you are, again, living in, Germany, and you have your capital gains and losses that you're being taxed on in Germany, then you would still report those same gains and losses in the US, but you would get a foreign tax credit for whatever taxes you paid in Germany.
Exactly.
Here's the downside, and this is what you have to remember is if you live in a low tax jurisdiction like in the Grand Caymans or something like that, and you're only paying 10%, but your rate in the US is 25%, that foreign tax credit will only cover 10%. And
you still got to make up the 15. Yeah. That's exactly my situation.
So the idea is that they don't ever want you to have to pay more than you would have in the US, but they want you to definitely pay as much as you would have.
Yes, and you know what's interesting? So let's stay within the context of tax. What did you make of the news last week? Well, maybe 10 days ago, that the Biden administration is, in one of their new bills coming up, going to put a few $1 billion towards the IRS to help bring in more tax receipts. Do you think crypto is going to be a focus of that? Some of that new money coming in to buy analytic tools and ledger scans and ether scans and Bitcoin scan type of technology?
I think you can guarantee it. I mean, it wasn't broken out specifically in in their proposal, but they want to give the IRS the tools, and for them, that's technology. And so you can already see there's several players in the crypto space who have done a lot of, who have done deep contracts with the IRS and with law enforcement, really, like FBI, but
Department of Justice, Treasury Department.
Yeah, exactly. But they are investing in it, and I know firsthand that they are definitely going to be using tools to help understand. Because again, there's a knowledge gap, right? I mean, there's a few people who really get it, but then your everyday field agent who's sitting in Tucson, Arizona, probably don't get it, and so they need support and need to be able to understand it. So, but yeah, I think you're right about that.
Well, and I think that technology is going to only get more aggressive and better as this market grows. It was one thing when we were in a $200 billion asset class. It's a whole nother bag of rocks when you above 2 trillion. We're almost knocking on 2.5 trillion. I see this market being 3-4 trillion. In no time, I think we could, even within the next 4 years, be at $10 trillion. Now we're talking about, this is big boy time.
Yep.
This is big boy time. The little games and all the kind of cute little, this little crypto renegade thing, there's going to be no hiding.
Yeah.
And just the nature of blockchain, like you said, the technology itself lends to transparency, or at least, what do they call it when you forensic accounting? It's going to be easy.
Yep. Yeah. I mean, you identify one address and then you just start pulling that thread and see where it goes.
So here I got a thing for you. This from the audience, Seth. If the gig at TaxBit doesn't work out, your new career could be, and we'll do a YouTube show. You'll be an overnight success. You could be the crypto tax bounty hunter. Like a subcontractor for the IRS, and we just film you bashing down doors and what do they call it when you unlock something? taking ledgers and finding out what's in there and getting the money for the IRS. What a show that would be. Coming to you Wednesday nights.
Let's do it. Let's do it. After my TaxBit days.
If that doesn't work out for you. Real quick note, Crypto and Coffee, Nick Black, thank you so much for the link to the data thing. It didn't work again. I got the same message. The RPZ whatever thing didn't fit whatever, and we're not streaming to Theta TV, and I really apologize for that. Did we talk about Flare yet? I don't know if we need to talk about specifically for Flare, but we can talk about any asset. Any asset. Let's say you're a holder. Seth, do you hold any crypto? You don't need to be specific. Okay, so you're holding a crypto.
I've tried my hand at day trading, and I'm just hodling now.
That's fine.
I don't have room for that kind of stress.
But Seth, so you're holding an asset, right? You've already invested in me. You're just holding it. You're allowing, and this is the beautiful thing. If you just hold, and that's all you do is hold, all appreciation is tax-free until you do something with it.
Yep, exactly.
That is for sure.
Yeah, you have to look at what a taxable event is. And Ruben, you're asking a question right now about whether a coin for coin trade is considered taxable. So number one, that is definitely taxable. It's considered going from one asset to a different asset, like you were going from Apple stock to Amazon stock. That would be kind of the analogy on the traditional side. But really, if you just buy and hold and you just sit there and let it continue appreciating, there is no taxable event until you dispose of that, and that disposal could be a coin for coin trade. It could be you using that to buy a Tesla. It could be you paying any number of ways, right? Or just cashing out to fiat. So it really comes down to what is a taxable event, and that's what triggers it. So just holding is not going to trigger any kind of tax liability.
Wheeze brings up a good question. Is there a way to transfer my ADA off Uphold without creating a capital gains event? No. Because you can't transfer the Uphold version of ADA. It's just a placeholder. It's an IOU. It's not a bearer instrument that you can move to something else, like some other wallet or something, and not sell it or change it or. So unfortunately, Wheeze the juice. You're using a good platform, but you should have went somewhere else to get if you wanted Cardano to be able to put in a Daedalus wallet or something. Sorry about that. What was the thing? Oh, this was it. So you're holding your crypto. You're just sitting there. You got it in your ledger. You're super safe. You're super conservative. You understand all your appreciation is tax-free. And then one of those tokens airdrops you a token.
Okay.
Now all of a sudden you've been given a new asset.
Yep.
That is traded on an open market, establishing a value.
All right. So you want a history lesson on this? Because
I do so badly, and so does my audience. Listen.
This is one of my favorite. I mean, this is one of the things where it's like, okay, IRS, I know you had a good intention, but you totally missed it, okay? So 2019, the IRS came out with their first round of guidance for cryptocurrency since 2014, so 5 years, okay? Now think about all that changed from 2014 all the way to 2019. I mean, that's a huge amount of growth, adoption, all kinds of things. So one of the things that the guidance said was that if you are airdropped a coin, so I'll get to where it gets interesting. So number one, if you're airdropped a coin, then you have to recognize income on whatever the fair value is on the date you receive it, okay? And then that established as cost basis. So for example, if I'm airdropped a coin and it's trading for $100, then I'm gonna recognize $100 of income. But then when I sell it for $1,000 later, I have $100 of basis. And so I'm only gonna recognize $900 of gain. So, it does kind of help, but you do get taxed immediately. This is where the history lesson comes in. We all remember when Bitcoin and Bitcoin Cash had that little hard fork, right? Okay. What's interesting is that the hard fork happened, I think it was August 1st of 2017. And a lot of people received their Bitcoin Cash pretty close to then. And at that point, when something is first released, like it really has a value of 0, right? It starts trading and people start giving it value as they trade it more and more, right? And so if you think about it, Coinbase didn't distribute those coins because they didn't support the asset until December. So 4 months later. Now, we all know December of 2017 was kind of a big deal for crypto, right? And so it's interesting because everybody who received crypto in 2000, who received Bitcoin Cash airdrops or from the hard fork at Coinbase, they theoretically should have paid taxes on that income of what they earned on that date, right? And that, I think it was in the $1,000 or higher. I mean, it was crazy at that point. So here's my philosophical question, Jerry. Why should somebody who received it 4 months after the actual hard fork, why should they be taxed differently than somebody who received it on the date of the fork? Even though, like, to me, it doesn't make sense. To me, the event that you look to is that, on this date it split. But instead, if you got your coins on August 1st at zero value, you didn't pay any taxes on it. But if I got it in December and it was $1,000, like, that doesn't make sense. And now again, that establishes cost basis. And so when I sell it later, I'm going to have less of a gain than you will. But what if you just want to hold it forever and then you sell it way down the road? I mean, it's an interesting thing. And I think that the IRS got it wrong. And I mean, I've had conversations with them about it, and without disclosing my sources, they basically said, look, what we submitted and then what came back did not look the same. I think it goes through committees and reviews, and then what comes out is oftentimes nothing like what it was originally intended to be. Correct. So there's my history lesson.
To that pipeline, correct. Transferring your asset from one holding device to another, whether it's a platform, to a cold wallet, to a hot wallet, to a wallet that's getting bed and breakfast and a massage, it doesn't matter. Transferring your tokens is not a taxable event. It's only when you sell it, swap it, or earn from it. Yep.
Or spend it.
Ooh, segue into one of the most wonderful things about TaxBit. Let's talk about the tax optimization element. Let's say some of you are actually utilizing digital assets and their value to buy goods and services. Now, how does TaxBit help me? How can TaxBit benefit me in that scenario, Mr. Seth?
So really, and again, I'm going to walk a fine line without disclosing too much because we have some pretty amazing things in the works. But we do have our tax optimization. So your strategy when you're disposing of coins, and if you're actually using it to buy items, you always want to try to sell whatever has the highest cost basis, which results in either a loss or a lower gain. And so many people will use the method specific identification, HIFO. So that's highest in, first out. I know you guys are all familiar with the term. It's been around for a while, but frankly, it really exists. It was really coined in the crypto space. So what we would do is we have our tax optimizer, which will tell you which assets are in a loss position, which means that those are the ones that you want to be able to sell. Now, even more than just like spending them to go buy things, we also, in the crypto space, there are no wash sale rules. And that means that you can sell an asset at a loss and buy it back in a very short period of time. So essentially, you're still in the same position, but you've now got a loss that you can use to offset other income or even carry forward to future years. But a loss now is better than a loss later, right? And so this is a way, our tools within TaxBit have the ability to actually go through and show you where your losses are and if you have an opportunity to take advantage of tax loss harvesting.
That, I think, is so important to understand. Not everybody has in their strategy the conversion of their crypto value into a medium of exchange, something to buy a good or service. However, it's not uncommon that our crypto holdings, for many of us, are our most liquid, most valuable holdings. And life happens. Aunt needs a kidney, right? Your son, something. I mean, if you have families, stuff comes up and you need money, and sometimes you've got to tap what you got. I know for a fact, if I came up against something where I needed more than I had in my checking account, I would have to go to crypto. And using this strategy of, well, geez, how do I keep all that in my head? Well, I don't need to. I just use TaxBit. TaxBit will tell me in real time which is the best asset to liquidate for this amount of money. That is a huge safety net for me. Not that I have a strategy to sell my assets, because I don't. I'm a holder like you. I'm here for the long run. But if I needed to, understanding which one would have the less impact on me come tax time, that's important information to have.
Yeah, and let me imagine a hypothetical scenario. If you have a crypto debit card, I know like Uphold and many
a lot
other
of people
places,
do too.
And now imagine that in the background you had an algorithm that prioritized those assets that are in loss positions, so that you can sell those and not incur taxes. In fact, you actually might get a refund because you're incurring these losses. So again, I won't go deep into that, but there's some really cool things that are coming up.
You just answered Ruben's question. Thank you so very much for that. Here's I think I know the answer, but let's ask you anyway. Seth, is TaxBit got any APIs or anything to do with DEXs, Pancake, Uniswap, 1inch, etc.?
So I think Michelle's kind of answered that. We have a beta DeFi offering right now. We are still working on it. It's definitely like a high priority on our roadmap, and so we're doing a lot of things right now, both at the enterprise level and the consumer level. And so this is definitely on the way, and we will be able to work with it. But you want to know another interesting thought on yield farming and liquidity pools? Okay, so this came from a conversation I had with, again, a fairly high-ranking official at the IRS. We were talking about, and it actually came from staking, but I think it applies to yield farming as well. His thought was, isn't staking or yield farming, isn't that a lot like quite literally growing a crop? So if I go plant a bunch of corn and then it grows and then I go harvest that corn, I don't pay taxes on that corn when I harvest it. I pay taxes on that corn when I then go sell it and it becomes income. And so his thought was, what's the difference? You have these coins that you're putting in and they're generating more. And so are they really taxable at the time that they're generated, or is it taxable at the time that they are used? Now, let me just throw a huge caveat in this, okay? I'm certain that the majority of the IRS sees it as taxable when you receive it, okay? And that's in the guidance, crystal clear. But I will tell you, there are people in the IRS who are thinking about this in different ways and trying to find analogies in kind of the traditional places and seeing if those fit these types of strategies. And so again, I will disclaim this till I'm blue in the face, but it was an interesting conversation, and who knows if that could, actually come into some kind of a reg in the future.
That would be wonderful. And if I were to ever get audited, I want the guy that you spoke to running my audit. Okay. With that being said, I want to follow up. I got one last question, and then I want to respect your time and let you do what you want. We'll do a final thoughts type of thing. One more question and then final thoughts. Does TaxBit calculate the difference between short-term and long-term capital gains?
Absolutely. Bread and butter right there. Yep.
That's it. That's when you get the 4-page printout and you hand it to your tax guy, and they go, oh, well, thank you for doing this, because I would have had to charge you $1,000, $2,000, $3,000 if you had to make me do it. I don't even know what all this stuff is, but okay, thank you. Boom.
Part of my team's job, we obviously as subject matter experts, we are supposed to be able to write down what the specifications of the software are, and then we need to test what comes out of the software to make sure that they reflect the laws properly. And so it's funny because part of that process is we actually will go through and create data sets and then calculate them by hand. And these are not big data sets. They're like 20 transactions. But I'll tell you, that alone takes 45 minutes. So if you just took all of your crypto transactions to a CPA, they're going to charge you $158 an hour to go through all of this crazy manual work, and they're going to mess it up anyways. They're not going to get it right because nobody knows how to do it. And that's where TaxBit comes into play. You can upload everything into through APIs or CSVs. Our chat team is amazing. They can get you going. If you really are complex, we can do CPA reviews. There's a ton of things that we can do to make this process so much easier. And then you just hand that to your tax preparer and you're good. Or you just put it in TurboTax and move on.
I will tell you, one of the very first people I sent to you, his name is Bill Bean, great guy. Spoke with him for an hour and a half on the phone yesterday. He brought up one point, and he said one of the, all the common stuff, that we hear all the time, all the raving about TaxBit. The thing that he said was the most beneficial for him was on your site, the ability for him to basically create what he directed you to what he wanted plugged into. It wasn't just this mass net. It was like he got to customize it.
Yep.
And he said that was very beneficial for him in the way that he structured his deal and his relationship with you guys, so that it makes it easy for his CPA. There's obviously, everybody's got different strategies, but I thought that was a raving review for you guys that I wanted to make sure I included on the show. Obviously, I'm a huge fan of TaxBit. When I first interviewed Austin, I was like, okay. And then I'm in. I'm TaxBit for life. Nothing's going to change that. And it's also one of the reasons why I want to keep once a quarter or so having you guys on the show. Keep in mind, all of you, if you're in the sound of my voice and you have not, and you're a U.S. citizen or need to report your taxes in the United States, the May 15th deadline is coming right up. If you want to check out TaxBit, there's a link in the description of this video below. I will guarantee you two things will happen. You'll get great service. And if you're feeling like you're not getting great service, you just ask for Michelle O'Connor on Twitter. It doesn't matter. 2 a.m. in the morning. She's feeding 3 children. It doesn't matter. She will jump on it and get you guys help. That is the kind of customer service TaxBit's got. And that's why I stand behind them and recommend them as much as I do. It's because the team and the product are both first class. It's not just good tech and, whatever. It's quality people and staff and an excellent product. This is a win-win in my book.
Oh, thanks, Jerry. Super appreciate all of the people that you've sent to us so far. I just think that there's such a cool community in the crypto space, and we feel honored to be part of that. And frankly, we're trying to clear a way for more and more people to come through, and we want to remove taxes as that hurdle.
Right on, Seth. Well, I'll tell you what I'm looking forward to. Write this in your notes.
Okay.
You're coming back on Jerry's show when you guys work out the interest, income, dividend, yield thing and incorporate that into the software, because my plan and many of my followers' plan is we want to be nursing off this for the rest of our lives, which means developing passive income strategies. And thank goodness in this particular industry, this crypto space, many of them are popping up that are far superior to anything that we can realize in the legacy markets.
Yeah, totally agree.
So it's really needed. Yeah, thank you. I want to have you back when we get that on the when that's on the platform and ready to go. All right. So Seth, I'll tell you what, I'm going to let you go. I'm going to stay with the audience for a few minutes. And Michelle, I know you helped make this happen. Don't think you weren't behind the scenes. I really appreciate you getting this meeting set up tonight, and for all your participation in the stream, young lady. We'll catch you guys soon. All right, Seth. Be well, man. Talk to you later.
Thanks, guys. Have a great weekend.
All right. Wow, what a great show. So, Karat, what do we got here? I'm going to answer your question. Jerry, off topic. Sorry. Do you do recorded calls for your Patreons so that they're available to anyone who can't make them live? Yes. All of my Patreon group meetings are recorded, and all Patreons have links to those meetings. If they can't be part of the meeting live and participate, they can always go back and catch the stuff, and it's all archived. It's blah, 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 blah. Oh, you saw me on Digital Asset News earlier today. Boy, what a great conversation that was with Rob. Any of you that caught that stream and have a question, fire it in the comments. I'll answer it. And for those of you that are tuning into my show and you didn't know that I did it, if you go to Digital Asset News, we did a live stream this afternoon, and it was really wonderful. We talked about network effects and our bull runs and bear markets gone. And we looked at exit strategies and talked about diversification versus concentration. It was a really good show. Really glad Rob had me on and we had that conversation. So it's available on Digital Asset News. Let's see here. I think not only is it, I want to say hi to TP Tico, JP Tico. Tico, it means Costa Rican. Hola, JP. Good to have you, mi amigo. Bulldog, thanks for tuning in. And everybody else, if I forgot to mention you or something, I apologize. I know I just saw Jungle, NK Jungle. Nice to have you in there. Let's see here. Crypto Yeti, nice to have you. I'm moving to Costa Rica. Oh, yeah, by the water. Oh, my goodness. Yeah, I was telling the story on Rob's channel when we did the live stream. I went and looked at 4 different properties in the last month. Criteria, there had to be room to build multiple buildings because I want to do a complex kind of thing. I want to have my nice house. I want to have some cabanas. I want to have a big kind of a general purpose rec area where we can have meetings and greet ups and stuff like that, and yoga and Tai Chi and just all that wonderful kind of stuff. Hey, William, nice to have you. William's a friend from California. Nice to see you on the show. So I was telling Rob, and I went and looked at this one property. Now it's way far away. It's an hour and a half away. And with my dad, I can't necessarily make that happen. But almost 2 acres, beautiful views of the mountains. At the bottom of the property is this spectacular monster river. And it has a stream that flows every day of the year, every hour of the day, going down the property line into the river. $29,000. It's already got a house on it, already got service. So it's already got electrical to the house, city water, even though you don't need it. A structure needs to be just gutted and rebuilt. But the point that there is a structure there, $29,000. 5 minutes away from a grocery store, a hardware store, a gas station, a small medical clinic, because it's in a tiny little town up in the mountains. $29,000. Is that crazy? I thought, I could take a loan from Nexel for 29 grand. Wouldn't hurt me, wouldn't do anything to my debt to income ratio. I could just buy that property. And then I thought, you know what? Hang on. It's not the perfect property. The perfect property has at least a 10-foot waterfall, and maybe I should just hold out until I can not only buy the property, but also build what I want to build. Maybe that would be the more prudent thing to do. But then I look at the portfolio and I go, God, I've never been this liquid before. I've never been this wealthy in my life. Which leads me to a whole nother set of things. How are you guys dealing with your newfound wealth? Some of you are wealthier now than you've ever been. Some of you are building a portfolio that will provide wealth like you've never imagined before. How are you dealing with that emotionally? How are you dealing with that on kind of a spiritual level? Is it impacting the way you think about things, the way you look at things? I will tell you, I caught myself on a Rivian, believe it or not, a Rivian website looking at the Rivian RS1, this phenomenal $80,000 brand new electric SUV that is just, in my opinion, the cat's meow. I want one. But then my brain kicked in, and some of the research and some of the stuff I did around sudden wealth not too long ago, about a year or two ago, kicked in and went, Jerry, why would you take these assets that are appreciating faster and better than anything else you could do in the financial legacy market and buy a depreciating asset with it? The only answer I could come up with is because I want one, because it's so cool. I'm wondering how you guys are dealing with those kind of things. Maybe leave some of that kind of stuff in the comments. It would really be interesting to hear, the back and forth with you guys on that. So anyway, hey, I think it's time to bring in the best producer in all of YouTube, my buddy Brady. Brady, why don't you come on in, or do you need me to pop you in? No, I'll just pop you in. Bang! Link to TaxBit in the description of the video.
That works.
So Brady, what are your thoughts on the show? What's happening?
Oh, it's a friendly reminder that I guess the tax man wants to get his cut too. But hopefully, because we can do it because we have people like TaxBit, hopefully it'll become less and less time consuming and thought evoking and annoying. I'm hoping, so at least there's that silver lining, but I guess you always have to make time to give the man his squeeze, because I don't know, it's tradition. Or maybe TaxBit will show how not utterly useless, but where our money should go. I don't know. Hopefully we'll all come around.
I'll tell you, it's really easy for me to want to put my head under the pillow and just kind of it's not real, it's not real, I don't have to worry about it. But the rational part of me understands that, unlike many things in life, this digital asset space lends itself to easy tracking, forensic accounting. And for me to even daydream that I am going to get away with shit that I shouldn't get away with is kind of a child's thought. You know what I mean? The grown-up in me kind of goes, okay, Jerry, listen, the practical element here is I'm dealing with blockchains that are immutable records, and forensic accounting and autonomous actors are going to be able to sift through the gigatons of data and go exactly. It went from his bank account to Coinbase to Bitrue to Bitrue to a MetaMask wallet from a it's just a boom. It's like how I might as well just get used to. I'm going to have to pay taxes if I sell. If you don't sell and you collateralize against your assets, they cannot tax a loan. You cannot be taxed on a loan. And I love that. So I think, it's pretty simple. The rich have outlined a process for us all to not be that concerned about taxes. If you buy pristine assets and they appreciate, collateralize them, take a loan against them. Be smart in your ratios. Don't over borrow. Understand that we're in a volatile asset class that will go up 40, 30, 40% and then drop 30, 40, 50%. If you're smart about it, there's ways to skin this and not be giving all your money back to the tax man if you're in jurisdictions that are going to have you pay taxes on these things. I guess if you live in Portugal or Puerto Rico, you probably don't care, but there's a lot of us that do. So right on, Brady. I'll tell you what, I don't even think I need a final thought. I think I've spoke plenty. I really do. I think I've talked a lot and maybe even too much. So with that being said, Brady and I would both like to thank all of you who have tuned in tonight, who continue to support and subscribe to this channel. Tell your friends about it. All the patrons that are in my Patreon group that continue to show up and participate in these live streams. Thank you. Thank you very much. Again, link for the TaxBit is below. If you're interested in the Patreon group, there's a link below. And Arnold Race, I got to say hello to Arnold. Arnold, first time I ever saw your name in the stream. Jerry, it was an outstanding show. I say if the portfolio is now so green, it's time to pay yourself while preserving the rest to continue growing. I tell you what, I have paid myself, but I pay myself in the taking loans. I take a loan to pay myself. How I use that money, though, I tend to buy more assets. I'm not buying new sneakers and new houses and new cars. I'm buying more Bitcoin, more Cardano, more Ethereum. I just got into the AI space. I love Fetch.AI and SingularityNet. I mean, I'm hooked. I want more of those assets. And so I can pretty much tell you, I think all my new money is going to go Bitcoin, SingularityNet, Fetch, probably 33%, 33%, 33%. Just because I don't know if you guys are into AI or what you think AI is going to do or how it's going to impact so many different industries going forward. Oh, I think AI is a monster in the making. Tony, thanks for showing up. I saw you on Dan's channel. How do I pay for a copy of your spreadsheet? Well, Tony, my tier 2 Patreon members are getting it tomorrow, as a matter of fact. That's one way. Anyway, folks, thank you so much for tuning in. Brady and I will be right back here next Friday night with something to say. We hope you join us. Until not next time. Until then, Pura Vida.
See ya.